Hello, and thank you for watching the Susser Holdings Corporation video, a part of the Burkenroad Reports program at Tulane University. My name is Spencer Schultz, and on behalf of my analyst team, including Zhu Yang, Kiki Wang, Jingya Ji, Evan Slasnick, and Thomas Murphy, I'd like to welcome you to our video report. Susser Holdings Corporation trades on the New York Stock Exchange under the symbol SUSS. Our team developed a 12-month price target of $61 per share, which is a 30.1% increase from the stock price of $46.88 on March 17, 2013. This increase is categorized as a Burkenroad Reports market outperform rating. 75 years ago, Sam Susser and his wife started the company with 2 gas stations in Corpus Christi, Texas, where the headquarters still is today. Eventually, Mr. Susser expanded from retail fuel sales into the wholesale fuel industry by creating Susser Petroleum. Sam L. Susser, grandson of the founder, joined the company in 1988, and with his leadership, Susser Holdings once again began expanding its retail store segment, starting with the acquisition of 26 convenience stores in its first year. Today, Susser Holdings has the largest retail and wholesale footprint in the Southwest, and is the largest non-refining motor fuel distributor and convenience store operator in Texas. Susser Holdings Corporation owns and operates Stripes convenience stores in Texas, New Mexico, and Oklahoma. Stripes locations offer food, beverage, and merchandise products, as well as branded motor fuel. Susser Holdings is also involved in a master limited partnership, or MLP, with Susser Petroleum Partners, which handles the wholesale motor fuel segment. Here, you can see retail locations marked by red diamonds and wholesale locations marked by blue circles. The Texas economy is currently performing well in relation to that of the rest of the United States. State unemployment rate, job growth, and automobile sales all indicate that the Texas economy is recovering from the recession. On December 31st, 2012, the Texas unemployment rate was 6.1%, which was 1.3% less than 2011 and 1.8% less than the national rate at that time. Also in 2012, the Texas non-farm employment was 2.5% higher than 2011. The Texas Consumer Price Index increased 1.5% during 2012, and Texas consumer confidence increased 8% from 2011 to 2012. Because the Texas economy is doing better than that of the other states, Texans are likely to have more disposable income to spend in convenience stores attached to gas stations and to purchase new cars. Therefore, Susser Holdings has a chance to increase sales volume. Ultimately, the benefits of the strong Texas economy will make expansion easier for Susser Holdings, which is a driver of revenues in the future. In September 2012, Susser Holdings split the wholesale petroleum segment from its core business and launched an initial public offering on the New York Stock Exchange as a master limited partnership under the ticker symbol SUSP. Susser Holdings owned a 50.1% limited partner interest in Susser Petroleum and owns the general partner of Susser Petroleum. The company earns wholesale segment revenues from Susser Petroleum through its unit distribution. Susser Petroleum acts as a fee-based wholesale distributor of motor fuels to Susser Holdings and third parties. In 2012, the wholesale segment, including Susser Petroleum, distributed 1.4 billion gallons of motor fuel to Susser Holdings retail stores and third parties. Under the omnibus agreement with Susser Petroleum, Susser Holdings arranged for Susser Petroleum to purchase up to 75 new or recently constructed Stripes convenience stores within 3 years, and those stores will subsequently be leased back to Susser Holdings at a predetermined rate of 8%. Under this arrangement, all leased stores will be added to a distribution contract. Susser Holdings will purchase motor fuel sold in the stores only from Susser Petroleum for 10 years, at a fixed margin of 3 cents per gallon, making Susser Petroleum the exclusive distributor of motor fuel to the stores. The offering of the MLP benefits Susser Holdings by lowering its cost of capital and decreasing its tax rate. In practice, the lower cost of capital may provide Susser Holdings with a higher market valuation and is effective for fostering future growth. Moreover, Susser Holdings gets taxed on its share of Susser Petroleum's income. Following the launch of Susser Petroleum, taxable income of Susser Holdings was deducted and will continue to be deducted for future periods. Therefore, the effective tax rate of Susser Holdings decreased from 39% to 32% in the fourth quarter of 2012. Management at Susser Holdings expects the effective tax rate to drop into the range of between 26 and 29% in the coming year. Susser Holdings has maintained an innovative business model to stay ahead in the competitive market. In the 1960s, the company pioneered the pay-at-the-pump system to allow customers to buy gas with credit cards. More recently, in November 2012, Stripes Limited Liability Corporation, a subsidiary of Susser Holdings, announced a partnership with Apache Corporation to begin installation of natural gas dispensers at selected Stripes convenience stores in Texas. The company has also developed technology that helps stop revenue leakages, a major problem in the convenience store industry. The system, called cashier analysis, allows for managers to quickly identify the exact moments when an employee theft or error occurred and caused a loss in revenue. A different system tracks customer behavior on the micro level. This technology allows Susser Holdings to cater to customers more directly than its competitors, as it can detect consumer habits that would have otherwise been too small to notice. This service allows the company to add substantial value for its customers and helps build brand loyalty. About 358 of the Stripes locations offer restaurant services that provide fresh food, primarily under the proprietary Laredo Taco Company brand. The Laredo Taco Company offers a variety of Mexican fast food with all fresh ingredients prepared and cooked on site. Laredo Taco Company has positioned Susser Holdings as a competitive player in the restaurant industry, especially with blue-collar workers looking for fast breakfast and lunch options. We calculated Susser Holdings' 12-month target price as $61. We used both discounted cash flow and market multiple methods as shown in this graph. Susser Holdings, as a convenience store operator with retail gas stations, has stable, although seasonal, revenues and cash flows, and the future cash flow is relatively easy to forecast. We use the capital asset pricing model and weighted average cost of capital to derive Susser Holdings' cost of capital, plus a 6% liquidity premium, as over 90% of the company's floating interest is held by institutional investors. Both free cash flow to firms and free cash flow to equity were used to calculate the relative value of the company, which returned similar results. We also used different market multiples to evaluate Susser Holdings' relative market position based on the historical multiples of Susser Holdings and comparable companies. Lastly, we found an enterprise value over sales and enterprise value over EBITDA ratio to calculate the final value of the company. The final price given by enterprise value over sales is $60.12, and enterprise value over EBITDA is $61.22. The Burkenroad Reports are produced solely as a part of an educational program at Tulane University A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you for watching our video presentation of continuing coverage of Susser Holdings Corporation. To view a full version of this report, or for more information about Tulane University's Burkenroad Reports program, please visit www.burkenroad.org. Thanks for watching.